Hey everybody, Remy Morvan here from the Morvan Real Estate Group. We're going to be talking about the May numbers here in Ottawa. There's been a lot going on, and I think it's always important to keep track of these monthly statistics and what's going on in the market. Whether you're buying, selling, or if you're just own right now, or even renting, because there's a lot going on in the rental market as well. Let's get right into it. In May of this year, through the real estate board and the MLS system, we sold 1,939 residential properties, which includes residential homes, freehold, and condos. And that's actually up from May of last year. But as we remember, starting in May, and well, even earlier than May last year, the interest rates started climbing. So it's not surprising that we're seeing an increase in sales. We're still just below the 5-year average. So the 5-year average is just around 1961 homes sold in the month of May. So what's that? That's telling us that the market is behaving the way it should. We've somewhat hit a new norm. The interest rates have calmed down. We don't know what's going to happen tomorrow with the Bank of Canada. The rates could go up again, but we have to save that for another video, and I'll definitely do a deeper dive with that come the decision tomorrow. We have about 5 to 6 weeks of inventory right now, which is very low. We're still in a seller's market. It's a bit better than it was last year. Last year we had about 4 to 5 weeks of inventory, so we've gained about a week compared to last year, but it's still critically low. But as we're seeing, the market is staying pretty stable. We're seeing some multiple offers, but that's mainly based on properties that are listed under market value because they're just trying to see what they can sell it for. But in general, the prices are, staying pretty stable right now. So it's telling us we're in a strong seller's market, but the prices are staying stable because buyers are not going crazy, especially with the rates that they're at now. Affordability has come down. So I think we're going to be in a very, slower market in the sense that it's just going to be, business as usual. Things are not going to fly off the shelf. In certain areas and certain price points, it's a bit different because affordability has gone down. Now you have a bigger pool of buyers in that affordability segment. So the lower priced properties will actually have a more active market than the higher priced properties. And it's a different price point than it was during COVID, et cetera, because during COVID, affordability was so high with the low interest rates that people were stretching themselves to get into their dream homes, et cetera. The average sale price right now for a freehold property class is $745, and that's a decrease of 7% from 2022. So, with the rise of interest rates, it's normal to see something like that. We're seeing a bit of an increase month over month because the interest rates have stabilized, but we're still down year over year in both the residential and condominium side when it comes to the average sale price for a home. The days on market as well have decreased from 27 to 23 days for residential homes and from 33 to 26 for condos. So right now, on average, what that means is it takes about 23 days, so just under a month, to sell a residential property that is properly priced, and about 26 days for a condo to sell when they're properly priced. So even though we have this low inventory, and let me tell you, balanced market is going to be much closer to about 3 months of inventory, and we have about 1.5 months of inventory. So we're still critically low on the inventory. And that is the big problem within Ottawa, within the province. There are new legislations that are currently going through the provincial government on building homes faster because we are one of the provinces that is taking in the most amount of immigrants, and yet we have a housing shortage crisis. And there's nothing really planned to build a sustainable inventory for all the new demand that is on its way and it's already here. So hopefully things will start changing with these new legislations. I'm going to have more of an update on that as we do have a meeting next week with a consultant, a developing consulting company called Fo10. And we're going to be meeting with them just to get more information on the legislations that are coming into play. But let's talk Ottawa right now. You know, things are what I call, and like I mentioned before earlier in the video, a new norm. So buyers and sellers are coming to terms with the increased interest rates where they're at. Buyers are getting their new affordability numbers and are coming out to, you know, as seen by the number of sales, we are right around the 5-year average. So buyers are behaving the way that they usually do year after year because, you know, they've been able to get their new numbers and come to terms with the interest rate they're going to be paying on their mortgage, and they're shopping within their budget. So I believe it's going to continue like that for the next few months. We will know tomorrow at tomorrow's Bank of Canada meeting whether the rates go up again. The consensus right now from, you know, economists and just generally mortgage brokers and everyone that we speak to, it'll either be no change or another 0.25% increase on the rate. So we will see tomorrow. There'll be more news. I'll make another video regarding that and the impact that it would have, and then we'll go from there. But other than that, if you're looking to buy or sell a home in this market, just realize you're in a more stable market. Unless you are looking into the much lower price range, you're going to be competing against a bigger pool of buyers that you would have been competing against, let's say, a year and a half, 2 years ago. So keep that in mind. And remember, speak to your real estate agent before making any decisions because the market is constantly moving and you don't want to get caught making a bad decision, especially in these type of markets right now that we're seeing. Hope everybody is doing well. And until next time, take care.